Hi, I'm Drew Barrymore, and I want to tell you how you can help to support the life-saving work of St. Jude Children's Research Hospital. When you give, you're helping ensure families never receive a bill from St. Jude for treatment, travel, housing, or food, so they can focus on helping their child live. This holiday, help St. Jude give children the greatest gift, a chance at a lifetime.
This holiday, help St. Jude find more cures for more children. Donate now at musicgives.org.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3, and just before my buddy Randy Wang on the 790 KBC News Blitz at 5. Right now it's Mottek On Money, live on the air, 790 KBC, streaming live online, worldwide, kbc.com. And yep, the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. A well-fed rally on Wall Street today following the main event of the financial markets this week, and that was the Fed decision on interest rates, a rate cut we got today, a statement on the economy, and then a full-blown news conference from Fed Chairman Jerome Powell, one of his last moments in the spotlight as Fed shares. His term will be expiring in the first half of 2026. The S&P 500 just missed an all-time high today. The Dow finished with strong gains. The Fed decision to deliver a final quarter-point rate cut for 2025, and that fueled a rally today. We see the S&P 500 closing up 46 points at 6,887. The Dow popped nearly 500 at 48,057, and the Nasdaq gained 78 at 23,654. The volatility index pulling back today to 7%. The Dow moved up about 1% to close at an almost one-month high, while the S&P 500 just shy of its 68.90 record high close, so just about 3 points below the all-time high, which we saw back in October. The Nasdaq, by the way, finishing higher and at its highest level since November 3rd. The Federal Reserve announcing a quarter percentage point cut to its overnight lending rate, so-called Fed funds rate, and that brings the prime lending rate charged by major banks down to 6.75%, impacting business and consumer loans. It turns out the third interest rate cut of the year was not an easy decision for the Federal Reserve based on what we got in the statement. And from Fed Chairman Jerome Powell's news conference today, an increasingly divided Federal Open Market Committee, that's the Fed policy-making group, made its call with a 9-3 vote. Chicago Fed President Austin Goolsbee and Kansas City Fed President Jeffrey Schmidt both voted for no decrease, while the Fed Governor Stephen Miron called for a half-point cut. At that news conference today, the Fed chairman said it was a close call. In his words, he said, "I could make a case for either side." He said that at the news conference, adding that policymakers are in a good place to wait and see how the economy evolves. He also said the Fed will once again buy Treasury securities with a $40 billion purchase on Friday. The Fed expects purchases will remain elevated for a few months and then reduce from there. Crypto's getting a bit of a boost. We see a Bitcoin at around 92,000. Coming up later this hour, we'll focus on cryptos with ELEANOR TERRETT, business news journalist and host of the Crypto in America podcast. Silver in all this has popped to a record high of $1.25 at $62.28 an ounce here at the moment. Gold also getting a pop, up about $30 at $4,254 and change. Oil holding steady, fairly steady at just below $59 a barrel. Oracle clearing the bar set by Wall Street on a big earnings report today. Looks like Oracle stock had closed up $1.48 today and is down about $25 now, and after hours trading back to around $1.97. NVIDIA, the magnificent one, down more than $1 at $1.83 and change. Watching this Hollywood drama play out, a tug of war now for Warner Brothers Discovery between Paramount Skydance and Netflix. Netflix stock moving lower today by $4 at 92 and change. Paramount Skydance up slightly, up 8 cents at $14.72. Warner Brothers shares up again today, up $1.27 at $29.53. We did see Paramount CEO David Ellison writing an open letter to shareholders of Warner Brothers today, saying it's not too late to realize the benefits of Paramount's proposal if you choose to act now and tender your shares. Warner Brothers has 10 days to respond to the hostile offer by Paramount Skydance. Netflix's co-CEOs said this week that they fully expected the move and are confident of closing their deal. Meanwhile, on health care, that's the big subject in Washington. House Republicans vowing to vote on a health care plan next week. But first, they've got to come up with the plan. We'll get the very latest on what's happening there in Washington with Grover Norquist, the president of Americans for Tax Reform. But first on Your Money, the markets, the economy, and the whole works now, the big Fed decision. Joining us live is Gabriel Wisdom, Managing Director at American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call on this important day today.
Well, thank you, Frank. This was the biggest event, certainly, of the month. And, inflationary pressures remain pretty elevated, according to November's survey of small business owners. 34% of them say they're raising their average selling price. 30% more are planning to do so. So many are wondering why the federal funds rate needs to be reduced, why the Federal Reserve needs to push rates down. And that's what we saw among the 19 members of the Federal Open Market Committee. They just don't feel so sure about it. So it's what is being referred to as a hawkish rate reduction. Here in the United States, our Fed is responding to stubborn inflation by making money even cheaper. Over in Japan, for example, the Bank of Japan seems intent on slamming on the monetary brakes. They're trying to cool inflation. And in the open market, the 10-year Treasury and longer-term bonds are fixed. They haven't budged. In fact, they're really slightly higher over the last few months, while rates have been falling on the short end. So that's the conundrum. The president said they're killing the growth because they're so afraid of inflation today. So clearly, the Trump administration wants to stoke the economy in time for the midterms.
All right, and here comes Santa Claus. We did get a pretty decent rally today. What's your reaction to that? And we have the S&P 500 just below its all-time high. The Dow is back above 48,000 here, pretty close to its all-time high.
Since I think it's 1950, the Santa Claus rally has a pretty good track record. Last year, though, the market didn't rise in this period through the first part of January. Santa Claus didn't come to town. That was very rare as occurrences go. There's only been two back-to-back negative Santa Claus years in the past 75 years, but we're off and running despite some of the big surprises this year. In February, we got the DeepSeek AI meltdown from China. In April, the president announced his tariff intentions, and then there are concerns about bubbles and artificial intelligence. And still, we've got lower interest rates now. That's very good for stocks.
All right, and looks like Santa Claus in the spirit of Burl Ives and Rudolph the Red-Nosed Reindeer on the Wall Street too, with Silver and Gold, that famous song from the wonderful animated film Rudolph the Red-Nosed Reindeer, which I'm sure we'll be seeing, if not already, on TV, and certainly people are watching it already online. But what about the silver here above $62 an ounce? Above $62 an ounce for the first time here. I think it touched 63 actually, and gold at the moment near its all-time high.
Well, Frank, I've liked the metals for the last year and a half, and it's not because I've got a crystal ball. I don't. It's just common sense. Silver is now an AI data center play, and it's essential for electric vehicle production. So silver's broken another historical record. The build out of AI data centers is intensifying the demand for silver. Also, the ongoing production of electronic vehicles which use more silver than combustion engines. And then gold, it's just one of the four primary precious metals, along with silver, there just isn't enough of it given what's happening in this data center revolution.
Very interesting. So we got silver at 62 an ounce, gold at the moment at 42.54, and platinum has seen quite a rise this year. Right now at about $1,670 an ounce. It was above $1,700 an ounce just yesterday. What about digital gold? I know you follow it, Bitcoin and others. We're going to be talking more about crypto with ELEANOR TERRETT, who's terrific on the subject. But what are your thoughts on crypto here?
Well, I'm sure she knows a great deal more about it than I do, certainly. But I've been watching this trend toward public companies around the world, not just in the United States, holding Bitcoin. They're buying Bitcoin as a inflationary hedge. It certainly hasn't worked this year. Bitcoin is, I think it's about 27 or 25% below its October all-time high of $126 per digital coin, something like that. But institutional buying is still happening. There's some 200 public companies holding Bitcoin, and now one of the major index companies, MSCI, announced that it's considering excluding companies from its indexes that hold more than half of their assets in crypto. That would be Mike Saylor's strategy. That would be removed from the index and a number of other companies. But still, the beat goes on. Crypto's hot, and I wouldn't bet against it.
All right, and turning now to the other big story that's developed in the last week or so, this battle over Warner Brothers Discovery, with Netflix making a bid for parts of Warner Brothers Discovery, and then Paramount Skydance folks swooping in, wanting to take over all of Warner Brothers Discovery properties, and now we got a tug of war going on here. And we see Warner Brothers stock in all this, close to $30 an ounce, $30 a share, I should say. I've been so focused on the silver today. What about what's going on here in Hollywood and some of these entertainment industry names?
Very exciting, Frank. It really makes the point that the old legacy media is not gone. It's not even close to gone. It's very, very valuable when you've got two behemoths battling over who gets the assets of legacy media. That tells you that these are essential kinds of media. Now, Netflix at HBO, I think 75% of HBO subscribers already have Netflix. Netflix is embedded in the ecosystem of media, but they want the old traditional media. And I think we're going to see more of this.
All right. And what about the tech names here? We see NVIDIA pulling back today, down more than $1 at 183 and change. It was Oracle that took the spotlight today and looks like moving sharply lower in after-hours trading here on its earnings report, down more than $25 now to 197 and change. It was Oracle that got that big surprise pop earlier this year, which made Larry Ellison the wealthiest guy in the world, even surpassing Elon Musk for a minute there on that big day. What about Oracle and these big tech names now?
You know, we've talked about it before on your show about how high-tech AI has a low-tech problem. It's just too expensive to build out these AI data centers, and companies like Oracle, Meta, for example, they're increasing the use of debt to fund the capital spending in this AI race, and that's hurting companies like Oracle, and then their revenue and earnings numbers fall short of expectations. Oracle is now widely considered an AI bubble indicator. NVIDIA, on the other hand, has some new competition. Certainly, they've got a strong grip on the whole system here. But now comes Meta's talks with Google over purchases of chips, and of course, we've seen the financial markets react. Google's chips also have been maturing, and they've highlighted their efficiency on large workloads. If this all puts a lot of pressure on the profitability for NVIDIA, it wouldn't surprise anybody.
All right, before we let you off the hook here, Gabriel Wisdom, any specific places where you are putting money now and or taking it off the table?
Well, Frank, I'm thinking 2026, and what are the areas that haven't participated? Healthcare and energy are two. The healthcare exchange-traded fund XLV has most of the big players. XLE, the exchange-traded fund in the energy patch. These have been among the strongest relative performers in the market the past 3 months. And academic research has shown that the best look-back periods for momentum strategies fall between 3 and 12 months. Right now, we're seeing green lights for both healthcare and energy. So I'm looking at those exchange-traded funds. Plus, I think after several years of very strong market performance, many are leaning toward the defensive end. And of course, this favors those companies that have steadier earnings profiles, low volatility, are strong fundamentally, and you find a lot of those in healthcare and energy. So those are areas I like.
We are going to be talking more about what the Republicans are talking about as far as a new healthcare plan. Any specific names in the healthcare space that you would consider at this point, and what do you think is going to happen with Obamacare and how these changes might impact these names?
Well, I think that given that we got some indications of voter sentiment with the recent situations, the recent elections, and the president is talking repeatedly now about affordability, the affordability crisis, and affordability that's the buzzword. Yet, and the administration is proposing spending a $2,000 dividend or rebate to Americans. It comes from tariffs, but the president, from my understanding, can't unilaterally spend tariff revenue on checks unless Congress agrees, and then you've got the Supreme Court. But he's putting a lot of pressure on pharmaceutical companies. And ironically, it's very, very profitable for the likes of Lilly, United Health, Abbott, Johnson & Johnson, Merck, Pfizer, these kinds of companies, and I like them.
Very interesting, and it is to be noted, some of those names, United Health, we see also Humana and Anthem, which is known as Elevance Health, also all got a pop today. Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, we wish you and everyone there a wonderful holiday season. Look forward to speaking with you again very soon. And thank you very much for taking the call on this big Fed day today, in which we saw a rally putting the major averages just below record highs.
Thank you, Frank.
Kick off the holiday season with the perfect gift for the soccer fan in your life. Head over to store.ussoccer.com and explore a wide range of official U.S. soccer gear and merch. Whether you're decking the halls or hitting the field, we've got you covered. Show your true colors and share the excitement of U.S. soccer this season. Visit store.ussoccer.com today and score big with your holiday shopping.
Hey there, I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible because, let's face it, money's too important to wing it. From investing strategies to economic trends to savvy travel, lifestyle design, and beyond, we're in this journey to financial independence together. Remember, you can afford anything, just not everything. So, afford anything. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KBC. We have a well-fed rally today after the Fed decision to cut interest rates by a quarter point and bringing the Fed funds rate lower, which translates to a lower prime lending rate, which impacts business and consumer loans. That is now 6.75%. The Dow coming in for a closing gain of nearly 500 points today, up 497 at 48,057. The S&P 500 at 46, the 6,887, just about 3 points below its all-time high. The Nasdaq up 78 at 23,654. The yield in the 10-year note eased to 4.13%. The volatility index also easing today by 7%. Silver taking the spotlight today, hitting record highs right now above $62 an ounce, $62.28, up $1.25. Gold at more than $29 here at the moment at $4,254 and change. Platinum just below $1,700. Bitcoin at the moment hovering just above 92,000. We'll be focusing on the cryptos coming up in the next half hour with ELEANOR TERRETT, who hosts the great podcast, the Crypto in America podcast, business journalist and a crypto expert. We see the battle continues for Warner Brothers Discovery, and Warner Brothers Discovery stock moved up $1.27 at $29.53 as this hostile takeover bid by Paramount Skydance is getting a lot of attention. Paramount Skydance shares moving up 8 cents at $14.72. Netflix which has a bid to buy Warner Brothers or parts of Warner Brothers Discovery, moved lower today by $4 at $92.71. The Magnificent One, NVIDIA, down $1.19 at $138, make that $183.78. In the healthcare space, we see United Health moving up nearly $5 today at $328 and change. Humana more than $6 at $256 and change. And Anthem, now known as Elevance Health, up more than $11 at $341 and change.
Looking for the perfect gift for the soccer fan in your life? Visit store.ussoccer.com and shop official U.S. Soccer merch. Celebrate the season and show your U.S. Soccer fandom with a gift from store.ussoccer.com.
Get ready for The Rush with Max Crosby.
You already know what time it is.
All-pro defensive end Max Crosby takes you beyond the field with exclusive insights, real stories from inside the locker room.
You could literally see us laughing, kind of chirping back and forth.
This is The Rush. Buckle up.
We talk about The Rush on The Rush all the time.
Don't miss the behind-the-scenes moments and interviews everyone's talking about.
We appreciate you guys. We're going to keep feeding you all the content.
Follow and listen on your favorite platform.
Here we go.
Mottek On Money continues, 790 KBC. We have ELEANOR TERRETT on the big crypto story here with the twists and turns on crypto, with Bitcoin right now hovering at around 92,000. Let's bring in ELEANOR TERRETT, the host of the Crypto in America podcast, also business and journalist and crypto expert. ELEANOR, sorry about that. Thank you very much for taking the call here this afternoon.
Of course, Frank. Good to talk to you.
Thank you. Well, take it from the top. Give us an update on how all the cryptos reacted to the Fed decision on interest rates and what's been going on here with these stomach-churning moves in the crypto world.
Well, Bitcoin is still off its all-time highs for the year, Frank. I think it was back in October we saw Bitcoin hit a high of about 126,000. As you mentioned, it's down now about just over 92,000, but it did get a boost today after the Federal Reserve delivered a quarter-point rate cut, sending the world's biggest cryptocurrency climbing towards around $94,000. So a little bit of a boost before giving some of those gains back. But market watchers tell me traders were hoping for clearer signals about more rate cuts ahead, but Powell said additional rate cuts will be tougher to justify just because the central bank has now lowered rates 3 times this year. Other analysts, though, say that Bitcoin is acting less like digital gold right now and more like a risk asset that just lives and dies by Fed policy, so much more like a traditional asset would. Fundstrat's Tom Lee says both the business cycle and monetary cycle are about to turn up, which could help Bitcoin break out of its recent slump as we head towards 2026. But those institutions are still buying. MicroStrategy, run by Michael Saylor, just added over 10,000 Bitcoin to its balance sheet this week, bringing its total to over 660,000 Bitcoin. That's worth, at today's prices, around $60 billion. And Vanguard, opening its platform to crypto ETFs, is set to invite a whole new wave of investor demand for those digital assets. As we look towards the end of the year, even with a recent 36% drop in overall prices, Standard Chartered is still bullish, though it's dialing back its expectations, now calling for 100,000 Bitcoin by the year end instead of 150,000, and I think as high as 200,000. Those predictions were going earlier in the year, Frank. So dialing them back a little bit, and they're saying 150,000 by 2026. Instead. So dialing back on those predictions, but we're definitely higher than we were last time I came on the program with you.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KABC. That Michael Saylor's got to have strong ulcer medication with those stomach-churning moves we've seen recently, and that strategy stock bouncing all over the place. I see it was down about $4 today, back to $184 and change. What about these crypto-related equities, which have seen stomach-churning moves lately?
Yes, crypto-related equities have been up and down with the market as well. Like you mentioned, MicroStrategy, Coinbase, a couple of those public companies. Well, we saw actually go public earlier this week. 21 Capital debuted on the New York Stock Exchange. It's trading under the ticker XXI, and it has over 43,500 Bitcoin, worth about $3.9 billion on its balance sheet, so a little bit less than MicroStrategy there. But its co-founder, Jack Mallers, said that the move is meant to give Bitcoin a clear place in the traditional markets. It's got some institutional backers in SoftBank, in Tether, which is the largest stablecoin company in the world, and also Cantor Equity Partners. So, a boost there from the Commerce Secretary, Howard Lutnick's former Wall Street company, giving the launch some serious weight. But the first day, as you mentioned, was rocky. Shares fell a little more than 24%, and Bitcoin itself had slid about 30% from its October highs, as I had told you before. But looking ahead, 21 Capital plans to expand into Bitcoin lending, capital markets products, products and educational initiatives as it aims to build an ecosystem around Bitcoin.
All right, Ethereum, let's talk about that. That's another one that's been bouncing around above and below 3,000 lately. Can you give us a good update on Ethereum?
Yeah. So, well, speaking of Ethereum, Tom Lee, right? So I mentioned Tom Lee before when I was talking about Bitcoin, but he's also the chairman of BitMine, which is the largest Ethereum-focused treasury company. He says the world's second largest digital asset may have already found its bottom for the year after it recently dropped below the 3,000 mark. We're skating above that now. But BitMine just scooped up nearly $500 million worth of ETH, pushing its holdings to more than 3% of the entire supply. And Ethereum has bounced back about 8% this week, outpacing Bitcoin's gains. But more on the longer-term view, Lee is more bullish on Ethereum than Bitcoin. He's arguing that Wall Street has chosen it as the leading platform for tokenization, which is the next major evolution in market infrastructure. Tokenization, of course, is when you put a digital twin of a traditional security or a traditional market vehicle on the blockchain, and it automatically becomes tokenized. So that's definitely ahead on Wall Street's books. Larry Fink is talking about tokenization. He says he sees everything being tokenized in the next couple of years or so. Just quickly on the market, though, Frank, remember last time I was on, Bitcoin had slipped around, I think, under the 85,000 mark, and the media was in full-blown frenzy mode, wondering whether it might be the start of some crypto black swan event. To show you just how little these swings matter to people who've been in this space for a very long time, Keith Grossman, who is the president of MoonPay, told the Wall Street Journal that he was more worried about the kidney stones he was dealing with that day than the Bitcoin dip. So, as I mentioned, prices go up, they go down, and these crypto traders, they have some strong ulcer medication, like you mentioned.
Right, and strong kidney stone medication, apparently, in that case. That's very interesting. Solana, another one that was catching a buzz for a while, around 135 here now, and good old Doge is hovering at around 14 cents. Anything else that's getting your price attention nowadays?
Yep, well, Solana, XRP, Doge, they have all just been included in a cryptocurrency top 10 index fund launched by Bitwise, one of the top crypto asset managers. And they both have been included in single product ETFs over the last couple of weeks that have been approved by the SEC. So you're seeing a lot more institutional interest around those assets. So we could see some price movements depending on how those institutional appetite shapes up towards the end of the year and going into 2026. Like I said, ETFs have been a real way for these traditional investors to get into crypto in sort of the ways that they might not have otherwise done so, opening up a crypto wallet or going online and signing up for an exchange. They can actually go to their brokers and they can sign up and they can go into these crypto vehicles through the traditional method. And as I mentioned before, Vanguard is also opening up access to these ETFs through their brokerage platform. Vanguard, the second largest asset manager in the world behind BlackRock. So you can be sure that there will be more liquidity and more institutional interest behind these assets as we move into 2026.
All right, and the banks, of course, also embracing this. Bank CEOs meeting with Congress. Anything coming out of that?
That's right. So bank CEOs are set to meet with Congress tomorrow. A handful of the top banks, including Citi and Bank of America, they are hoping to get a say in what's going on Wall Street right now, going on in Congress right now, which is the passing of a crypto market structure bill. Now, we're not anywhere close to it passing, Frank. It's looking more and more likely that we're probably going to have that be passed, maybe go to President Trump's desk in the next couple of months or so. A Senate vote is looking likely for early 2026. But these big bank CEOs, they're really interested in having a say in how crypto is going to be regulated going forward, because they are big stakeholders now in the crypto ecosystem. They want to have a say in what's going on with the stablecoin yield. I won't get into all the nitty-gritty behind it, but they're basically very interested in not having stablecoin yield basically mess up their capital. They're concerned that stablecoins, which are massive business model here in the U.S. now since the passing of the Genius Act, they're worried that some of that market share will be taking away some of their capital. They want to go to Congress and they want to sit down and they want to say, hey, we need to have a say in this too, and they want to make sure that their lunch is not getting eaten by crypto, so to speak. So that'll be happening on Capitol Hill tomorrow. Some of the big bank CEOs will be meeting with senators to kind of hash this out and see what they can do to get their wants and needs in the bill as well. All
right, I'm going to add World Traveler to your list of credits in my next introduction to you, but I'll mention it now. How was Dubai and any other big crypto conferences have you attended lately?
Dubai was wonderful. It was my first time over there. It was a great experience. I was there for Binance Blockchain Week, and it was incredible. highly recommend if anyone has a chance to go. The jet lag was absolutely dreadful, though, Frank. I do not recommend not sleeping on that plane on the way over because that really messed me up. But that was my last travel for this year. I will be heading to Hong Kong in February and a couple other destinations in the new year. So very much looking forward to that. But for now, that's Ellie Terrett done with travel for Crypto in America in 2025. So looking forward to an exciting 26.
Very good. Well, we're going to have another conversation before the year is over to recap what's been an epic year for cryptos, with the Bitcoin hitting record highs above 126,000, got down to around 80 recently, and now back up to around 92. And we will follow the bouncing ball with you, Eleanor. Eleanor Terrett, business news journalist, world traveler, and host of the Crypto in America podcast. Eleanor, it's always great to have you with us. Thank you very much for joining us live this afternoon.
Thank you, Frank. Have a great night.
You too, and a great holiday season to you and everybody there. And Mottek On Money continues here, 790 KABC insurance premiums, or as they say in the South, insurance premiums. Yep, that's how they pronounce it. Insurance premiums set to skyrocket for millions of people heading into the new year. If Congress fails to extend subsidies for the Affordable Care Act, also known as Obamacare, all that's set to expire on December 31st, which will be rolling up pretty fast here. House Republicans vowing to vote on a health care plan next week. That plan's still coming together. And joining us live now is Grover Norquist, the president of Americans for Tax Reform, has a front row seat on all this. Grover, thank you very much for taking the call here this afternoon.
Absolutely. Good news is that the Republicans in the Senate have a piece of legislation that says we're not going to continue the bailout of Obamacare. They call them subsidies. It's a bailout. Obamacare has failed. Obamacare said it was going to reduce everybody's insurance costs by $2,400. Instead, they more than doubled. They said you could keep your doctor, and that turned out to be so not true that the Washington Post itself gave "you can keep your doctor if you wish to" statement by Obama to be the lie of the year. Okay, now they only told you that after the bill passed, but they say it. So Obamacare promised to do one thing: we're going to give everybody health insurance, and it'll all cost less. Not everybody got health insurance, and it cost more. You had fewer choices, and it cost more. You were required to buy all the insurance as a 20-year-old would, as if you were 50. It made no difference what time of your life you're in. Of course, it does for insurance purposes. It should. And as a result, they have to bail it out because it's failing. It's too obviously increasing costs. So the taxpayer dollars, $500 billion, just for a few years extension, they want to throw at it. And the answer is no. We need to fix Obamacare or cut it back or give people the option to leave. We're not going to throw money at a failure. And again, there's no reform in the Democrat bill. There's more spending on a failed Obamacare system. The Republicans are saying, here's some alternatives to Obamacare, and we're going to let people do those. That's the good news. There'll be a vote on the Democrat proposal, which has 3 more years of subsidies, of bailout, and no reform, or the Republican proposal, we're going to have a reform, and it won't cost a penny more because we're reforming it, fixing it, reducing it. We're not continuing it.
On there live with Grover Norquist, president of Americans for Tax Reform. As I understood it, in the House, meanwhile, they're moving forward with a plan that would not extend the subsidies, but would instead offer consumers some funds to defray health care costs. Will there be some sort of a reconciliation here? And ultimately, what do you expect to come out of all this?
Yeah, the Republicans in the House and Senate are basically on the same page. We're going to put a vote up on both sides, and the Democrats can all vote for the status quo. The Republicans are delighted that the Democrats want to vote to keep Obamacare going without reform. We've all seen the headlines that in one city, in Minneapolis, in Minnesota, they found tremendous amounts of fraud where people were signing up for Obamacare, getting free coverage, and the money was going to other people buying all sorts of stuff with that money. Money was being shipped to other countries. The level of the fraud that they've discovered in one city. And now that's something that they're looking at in Maine, not just in Minnesota. We can imagine, I don't suppose all the enterprising young men and women with criminal backgrounds live in Minnesota. There must be some in California and other states. So the amount of fraud here is huge. And the Democrat position is keep hiding the failure with higher taxes and more bailouts. That's not going to fly.
All right, affordability, that's the word we're hearing all the time now. President Trump mentioned it again today. How is this word impacting members of Congress now, and especially as it relates to this important health care equation?
Yeah, I think the establishment press, which started in on this conversation, has not done itself a favor. There are two ways to make people's lives more affordable. One is to have prices stay low, not go high. When the Democrats were in power with Biden, they went up by 22%. You're now looking at a much lower level of inflation with the Republicans. Things are therefore more affordable now than they were then. Gasoline prices have actually fallen. And then the second part of affordable is if your pay goes up, everything in life is more affordable. And real pay is increased on average across the country in the last year under Republican leadership, whereas it went down during the 4 years of Biden. So we are better off earning more money than before under with the Republican Congress and President Trump, and the Democrats had a fall. We actually saw a decline during the 4 years of Biden of real take-home pay when you take inflation into account. So let us have that discussion. Absolutely. It is not one the Democrats should welcome.
Right. Affordability, of course, was the big word in the New York mayoral race. And now we have a Democratic newly elected mayor of Miami with all those New Yorkers moving to South Florida. What's the buzz about that?
Well, of course, by affordable, he means we're going to hide the price.
Yeah.
By raising taxes, spending it on something, giving you the subsidized version of it that other people are paying for, and then you say, oh, the price went down. No, the price didn't go down. The price went up. This price was hidden in higher taxes. And of course, when asked about affordability and all these things he wanted to do, give people free this and free that, the answer is one, there's going to be massive tax increases to pay for the free stuff, which kind of suggests it's not free.
Free after you pay for it. That's how it is, right?
Yes, exactly. Yes.
All right. Anything else? What about the $2,000 tariff rebates? Anything moving forward on that one? We're all eager to get some more jingle in the pocket this holiday season.
Well, what people will see is bigger refunds because there were so many tax cuts in the big, beautiful bill that a lot of people haven't changed their withholding. So if you have overtime, if you get tips, if you have children, you got a bigger per-child tax credit. Everybody gets lower rates than they were otherwise going to have because the rates were going to go up. So there's a lot of more tax refunds coming than people had expected. And I think that the $2,000 idea is an interesting one. Challenge is there isn't any money because we're in a deficit. The money's all spent. And the second part is the Supreme Court is going to have a decision which will likely say that some of the Trump tariffs are not constitutional because the Constitution very clearly says all revenue-raising devices, tariffs being one of them, have to go through Congress. You can't do it as president. There are certain tariffs that because Congress gave the president the power for, I think, steel, aluminum, and dealing with Japan, China, where the president can do that kind of negotiation. So some of the tariffs will be constitutional and they'll stay. Some won't be and they'll go away. They also, the government's going to have to pay back to people who paid that tariff money, have to pay that back to the Americans who are paying higher prices because of tariffs that are not constitutional. So until we know what the decision is by the Supreme Court, we don't really know how much revenue tariffs will be bringing in.
All right, Grover Norquist, President of Americans for Tax Reform. Grover, always great to have you with us. We're going to have an open line to you with all this big news brewing there in Washington. Hope to speak to you before the holidays, and we wish you all the best for the holiday season. In the meantime, stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money.
Family Matters amplifies the loudest and the proudest political voices in the Black community today.
What's up, guys? I'm CJ Pearson. There's so many incredible perspectives here in the Black community that you're going to hear from each and every week. This is exactly what the mainstream media was missing.
Because faith matters, country matters, and family matters.
And actually talk to the people at the forefront of this change in the community. And by the way, it's no small number. It's growing every single day. That's why this moment matters.
Family Matters with CJ Pearson. Follow and listen on your favorite platform.